This has been going on for well over a year now, so I don't think I want to buy on the good news. I think I want to buy on bad news, because that's what the trade has been for the last year. Buy on the bad news, sell on the good news if you're a trader. But for longer term, I am optimistic they'll get this first phase one section done, and when they do, then you can put your money on it.
So, Dory, I mean, the markets seem to have it right. I don't mean that in saying that the record high is justified by the comments. I mean, every time we see headlines, whether they are positive or negative incrementally, the markets don't seem to go up by 500, 1,000 points of the Dow at a time. It's almost like the market is fine-tuning. Is that a fair characterization of how markets are weighing trade headlines at this stage?
I like your word of fine-tuning. When this first started, we would have more violent or more volatile changes in the market from the news, and they've been slowly coming down now. And I think the market has grown a little bit more callous to these, just as we're discussing here. So fine-tuning is a good word.
Now, if we take a look at the places that have seen the leadership in this move towards record highs, it has been in some of those trade-sensitive areas in the market. I think industrials, I think technology, maybe semiconductors specifically, heavy equipment manufacturers. Is that a place where investors still want to be maybe adjusting their exposure, given what we're seeing right now with trade headlines? Or are there places that you're finding deeper value in the markets, given what we've seen?
I think there are two answers to that. One is, I don't think you want to go reaching on any of this, because these trade deals are going to come in phases. And it's one thing to come to a deal on agriculture. It's a whole nother deal to come together on intellectual property and everything else. So a good place to hide out is where the deepest value is, and we've been harping all year that banks are a great place to hang out all up and down the sector. So if you look at the large cap banks, they're up over 20% in the last 3 months, and you can still get them at high single digits, low single digits PE ratios with a nice 2 to 3% yield. And that works all the way down into banks like PacWest, which has a 6% yield and is one of the top earners in the country in net interest margin, net income, and then Cullen/Frost in Texas, which is a 3% yield. They've been strong through 2 bank crashes in the state of Texas, and they're trading at a low PE multiple. So there's a lot of places to hang out in banks and in some other areas, say in technology. I think I like Apple and Microsoft over Facebook and some of these more risky names. Netflix, rather than buying Netflix, why don't you hang out in Disney and AT&T? There's some great. This is a great market to be very discerning and very picky about what you're buying.